It's Matt from Universal CPA Review, and thanks for checking out this video. Now, this is an explanation video for one of the simulations in the Universal CPA Review platform. Basically, you're going to have to review some emails from the CFO. She'll tell you what type of method to use to allocate joint production costs, and then you're going to have to solve for it, right? So it's a great simulation, definitely one you could see on the exam. Now, before we get into the video, please subscribe to our YouTube channel if you already haven't done so. We love to post these videos and we need you as a subscriber. If you want to join our Facebook study groups, the links are in the description to this video, and you can also sign up for a free 14-day trial. We give you the longest trial out of any providers on the market, and you'll have 100% access. And lastly, please reach out to us about any promotions we are running. We have discount codes. If you're looking to switch from another course, ask us about the Spilt Milk program. And then lastly, if you would like to consider payment plans, please ask us about those as well. Now let's dive into the video. Today we're going to talk about Exotic Hawaii. Now they're a production company located in, of course, beautiful Hawaii. Now we're going to focus on 3 different types of joint products. Now they're illustrated below, and you can see it's going to be a surfboard and paddleboard, and then we have a jet ski and a boat, and then we have a scuba and snorkel, right? So all of those sound pretty fun. Now the CFO, Wailea, she needs us to help her calculate the amount of joint cost that should be allocated to each product. Now fortunately, she forwarded us an email for each of those joint products. We can use that information to figure out what the joint cost should be for each product. So as you can see in the simulation, right, in column A, we have each product. In column B, we simply just need to input the allocated cost, and that's going to be a dollar amount. It's going to be a whole number with no decimals. So make sure you read the instructions for this one, and definitely on the exam. So let's start with the surfboard and paddleboard. So when we look at the email from Wailea, well, the first sentence, it tells us for surfboards and paddleboards, we use the relative sales basis method to split joint production costs. Now, those joint production costs prior to split off are $52,250. So that is the total amount of joint production costs we're going to have to allocate between surfboards and paddleboards. So now that we have the actual allocation method, how do we do it? Well, it's going to be 3 simple steps, and I'm going to walk you through them. So our first step is going to be to calculate the total sales value between these 2 products. Now, they could give us the total sales for each product, and we just add them together. In this case, we are going to need to calculate sales by taking units sold times the sale price. So as you can see in step 1 for surfboard, well, we would take 1,500 units times $250. That equals $375,000. Same calculation for paddleboard. We take the 1,250 units, multiply by 200, and that gets us $250,000 worth of sales. So when we add together the 375 and the 250, that gets us the total sales of $625,000. Now in step 2, this is where we need to calculate basically the relative sales value for each of these products. And this is just a ratio out of 100%. So just like any other ratio, we'll take the sales value for surfboard of $375,000 divided into that total sales amount of $625,000, and that means surfboard makes up 60% of total sales. And same calculation for paddleboard, and they make up the remaining 40%. And what's our check here? Does it equal 100%? And it does. So the last step is just going to be to allocate those joint costs of $52,250 to each product. And we're going to use those percentages we just calculated. So for surfboard, take 60% times those joint costs of $52,250, and that means the allocated joint cost for surfboard will be $31,350. And then for paddleboard, same calculation, 40% times $52,250, and we get allocated joint costs of $20,900. And guess what? When you add those 2 together, you end up back at the $52,250. So that's your final check to make sure that you did allocate 100% of the cost. So let's move on to jet skis and boats, right? Another fantastic, fun product from exotic Hawaii. Now, referencing the email from Wailea, she tells us we're going to utilize the unit volume to allocate joint production costs of $30,000. So the unit volume allocation, it's similar to sales, except it's based on units. So they give us the unit volume for year 3 for each of these products. So let's dive into the 2 steps we need to perform. So using the table from the email, the first thing we need to do is just add up the quarterly volume for each product. So for jet skis, it's 80. For boats, it's 45. And that means the total units are 125. So in step 1, we can see we take 80 units, divide that into 125 units, and that means jet skis makes up 64% of the unit volume. Boats, they make up the other 36%, right? So again, our check, does that equal 100%? Yes, it does. So in step 2, we just take those percentages we just calculated, again, multiply by the joint production cost of $30,000 from the email. So for jet skis, we take 64% times 30,000. That equals an allocated joint cost of $19,200. Same calculation for boats. That gets us to $10,800. So that's what we're going to plug into the simulation. Again, what's our final check? Well, if we add $19,200 plus $10,800, that gets us back to total joint production costs of $30,000 for jet skis and boats, right? So we flew through that. That was quite straightforward. So our last set of joint products are scubas and snorkels. I've only been snorkeling. I wish I could go scuba diving maybe one day soon. Now, based on the email from Wailea, she tells us we're going to use the average unit cost method. So this is a bit different than the other methods. I'll show you how to do it. The other information we're going to need here is that the joint production costs at split off were $30,000. And then we have some information about the products. We have the units sold and the sale price. So we're going to need the units sold for the average unit cost method. So our first step is going to be to calculate the cost per unit on an average basis. So we're going to take total joint cost of $30,000 from the email, and then we need to divide by total units. So that's going to be the 2,000 of scuba plus the 1,750 of snorkel, and that gets to 3,750. So take 30,000, divide by 3,750. That means the cost per unit on an average basis is $8. So that was simple, and hopefully you got it, because if you got step 1, step 2 is easy. We just take the units sold for each product, multiply by that cost per unit, and that will give us our allocated joint cost. So for scuba, it's 2,000 units times $8. That equals $16,000 of joint cost. Snorkel, same calculation. We get to the 14,000, and guess what? When we add those two together, it gets us back to our total joint production cost of 30,000 from the email, right? So that is how you use the average unit cost method to allocate joint production costs. So this was a great simulation because we learned how to apply 3 different types of methods to allocate joint production costs. We talked about the relative sales method, we talked about the unit volume allocation method, and we also talked about the average unit cost method. Any one of these methods, you could see it on the exam, right? So hopefully you enjoyed this simulation. I always try to use fun and exciting locations because it makes me remember about this simulation, but also makes me feel good about when you pass this exam, you jump on that plane and you go straight to Hawaii, right? Let me know how your trip goes and we'll be celebrating together.